Welcome to Property Focus, I'm James Mitchell. Making headlines this week, lenders tighten their purse strings for those investing in mining towns, and affordability constraints drives demand for smaller units. But first, to our lead story. A top property expert has challenged the common belief that the Australian property market is flat and unaffordable. Chairwoman of the Property Investment Professionals of Australia, Margaret Lomas, told Property Focus that Australia has thousands of markets all performing at different speeds, and there are still affordable options for investors.
We need to be considering markets like the outer suburbs of Adelaide and some of our regional markets in both New South Wales and Victoria, and some of the large regional centres in Queensland are going to show some significant growth in rental yields and values.
Mining towns such as Port Hedland and Gladstone, which offer rental yields of over 12%, are continuing to attract property investors. But those hoping to strike gold should consider the risks involved and understand that banks are growing wary of lending against properties in mining towns, according to Positive Real Estate Chief Executive Sam Saggers.
The fly-in, fly-out mining communities or one-horse towns where there's populations less than 10,000, banks will really tighten up their lending in those particular areas. So for an investor who thinks they may actually get into those markets on a 10% deposit, they may be surprised to work out when it comes to settling the property, the bank's only going to lend them 70%.
The issue of affordability and changes in lifestyle choices are forcing Australians into smaller residences, creating stronger demand for units, Positive Real Estate founder Jason Witten has claimed. Speaking to Property Focus, Mr. Witten said that the widespread belief that one-bedroom units and studios provide little resale value is an outdated myth. Investors should get over affordability and get into the market, he said.
One, affordability is a big issue in Australia. That's not going to change, so let's everyone just get over it, because land ain't going to get cheaper, labour's not going to get cheaper, materials are not going to get cheaper, the councils aren't going to lower their rates and fees. So the reality is the prices might stay the same or go up in value to cost or to build a property. I can't see that going down in any reasonable way right now.
And don't forget that the November issue of Smart Property Investment is now on newsstands. Pick up a copy today to find out where you can invest for under $300,000 and achieve a 7% return. We review the nation's top 30 suburbs, plus the Fast 5 with over a 10% yield. That's what's making news this week. I'm James Mitchell. Thanks for joining us.